So guys, welcome back to the Stefanie Henry channel. And today we have Chase Lyng with us, who is a lender with Supreme Lending. Welcome, Chase.
Thank you. Thank you for having me.
Yeah. So why don't you start off by telling us a little about yourself?
Sure. So I am a mortgage loan officer licensed in the state of Georgia. And, I operate mostly in the Duluth area, but I'm licensed throughout Georgia. I, help people buy homes in Canton, anywhere in Georgia, I can help them. You go and find them the home. I'm the one who helps them get the money to do it.
So you the money man.
I'm the money guy.
All right, let's do this. So speaking of money, what types of loan programs are out there today?
Sure. So the answer is tons, but it really boils down to, four big programs that are common. It's USDA, which is rural areas, VA, that's for veterans, and then the big two, FHA and conventional.
Okay, perfect. And I know some of them have what they call a jumbo loan. Can you tell us about that?
So a jumbo loan is anything. So these different programs have limitations on the loan amount. So if you have a buyer who wants to buy something, substantial, like $1 million property, and they can only put down a certain amount, they need a loan that is outside of those parameters, then they would need something called a jumbo loan.
Okay, so that's like the luxury homes and things like that.
It's typically going to be your big, nice houses.
Yeah. Sugarloaf, here we come.
Yeah. Who wants a really big house?
A lot of people.
Yes.
So now we're going to go to the other end of the spectrum, which are down payment assistance. What
are
those?
So down payment assistance, it's exactly what it sounds like. It's down payment assistance. And just like with anything, there's tons of different options. What I do as a loan officer is, depending on the person and their situation, we'll look at all the different programs available, and then we'll look at all of that, and then we'll see, okay, what does this person qualify for? And if it comes out that there's 3 or 4 that make a lot of sense, I will, call them, show them everything, and say, hey, what makes the most sense for your budget? And with down payment assistance, there's so many different versions of it. If someone qualifies for several different programs, I will show them, hey, this is what you would do if it was this program. This is what it would be if it was this program.
So when I get a client and I send them to you, and I don't have to say, hey, Chase, do they qualify for down payment assistance? You're automatically going to look at that?
Yeah. So, if you call me and you send me a client, depending on how much you know and depending on how much they've shared with you, I'll kind of maybe have a guess. But after I've spoken to them, I'll have a general idea of what we're going to be looking at. But then once I really get into the nitty gritty of what their story is, how much money they make, what their credit score looks like, then I can look at those different programs and, okay, they qualify for this, they don't qualify for that.
Okay.
Does that make sense?
It does. So now that we've talked about down payment assistance, tell me what closing cost is.
Closing cost. All right. So can I ask you a question?
Yeah.
What do your buyers think closing costs are?
They really have no idea what closing cost is when they first come in. And as an agent, 99% of my buyers, I sit down with them in a meeting before we go shopping, and I try to explain what closing cost is and that it's their fee, but I don't know what actually makes up closing costs. That's why I'm asking you.
Great. So I'm glad you asked that. And I'd like to make one note. She just said about how she explains. If your realtor or your lender is not educating you throughout the process, go find a new one. Yes. Because it's not just about getting you in the home and getting the money for the home. It's also about understanding this process so that it's not stressful and that you understand fully what you're doing. So what you just said about, I try to explain to them, thank you. Yes. Because not everybody's doing that. So anyways, so closing cost.
Yes.
A lot of the people that I run into that have a misunderstanding about closing costs think that, they need 3% for a home if they're a conventional first-time home buyer, and they save up that 3%. Closing cost is additional to that down payment. And it's typically anywhere from 3 to 5% of the sales price, without going into too much detail. But, it can be things like the lender fees, title fees, appraisal fees, and these are things you have to pay. It's the cost of borrowing money. And it's the buyer's responsibility to pay those things. So a lot of people think all they need is the down payment, and there is a little bit more to that. And there's something we can do to alleviate.
Yeah. So when I have a buyer and I'm sitting down, I ask them, I try to calculate about 7.5% of what they're going to have to bring to the table.
Mm-hmm.
And then I also talk about seller concessions. Explain that.
Seller concessions. So seller concessions are an excellent tool. And that's what it is. It's a tool.
Mm-hmm.
If you have a buyer who, their credit score is perfect, they've got the money, they've saved up their down payment, they're just, very well suited to buy a home and they want to buy a home. They're willing and able. That's what we like to say, willing and able. But they, didn't know about the closing costs.
Mm-hmm.
They've never heard that. So something that I'll do as a lender is, hey, I will pre-approve you. You can absolutely do this.
Mm-hmm.
The only, we just got to make sure we're going to get some seller concessions from the seller. So if you find a home and they're willing to do seller concessions, you can absolutely buy that home as long as the seller concessions is enough. And, there's limitations depending on the program and how much you put down of how much seller concessions you're allowed to request. And that's something like, we talked about earlier about how we build different scenarios for people and we let them decide. And if, someone is putting down less than 10% and they need 6% seller concessions to make it happen, we're going FHA because FHA, we can do 6% without them putting down too much. Does that make sense?
That does.
That was really, really in depth, but that's what it is.
So seller concessions can be used. Closing costs depends on the loan amount and loan type.
Seller concessions, yes. And it also depends on how much you're putting down.
Okay. Perfect. So, again, thank you, because I never know how much. I don't see what my buyers qualify for. All I get is a letter. So I like to know that you give us how much seller concessions they need, if any, before we put an offer on a house.
Absolutely. And for the other realtors, communicate with your lender for everything, especially when it comes to making offers and things like that. Because if you're working with someone that's not communicating with you, you don't know, if this person might have needed seller concessions to actually qualify. Even though you have the pre-approval letter, it's very important to be communicating.
Yeah, I
she does.
Too much.
No, we know you don't. We communicate great.
We do. So another money thing that buyers have to come up with is earnest money. What is earnest money? And does that earnest money go toward the closing costs?
Earnest money absolutely goes toward your closing costs. Another term for it is good faith money.
Okay.
And essentially, I was actually just talking about this yesterday. Someone was asking if they had to put down earnest money. And it's good faith money. You're putting earnest money down to, tell the seller, hey, I'm serious. I want to buy this home. And that'll, of course, go toward, or I don't know, the best way to explain it is maybe deducted from your closing cost. You're still paying the money. It's the same price. And then, going back to communicating with your lender and realtor is, ensuring that the due diligence period, without going into too much detail, is set up to where you are safe and that this is realistic.
Yes. As a real estate agent, I know it's my job to protect my clients' earnest money.
Absolutely.
So,
and, Supreme does things like 8-day closings, and we, with 8-day closings, we do that because we are confident in our ability to close this loan. But it's no one should ever assume we can do an 8-day close because we've always done them, because you never know if there's that's why you communicate with your lender, because there could always be something that was happening behind the scenes.
Yes. Like the person went out and bought a car yesterday.
Exactly.
That's a whole nother subject.
I see it all the time. Don't buy a car if you want to buy a house. Don't buy a car.
Or don't go furnish the house before you have it.
I've seen that too, actually.
Sorry, guys. We digress. So another thing that has been going on a lot, what does it mean to buy down a rate? And who can buy down a rate?
All right. So that means two different things. So so a lot of people think, what is the rate today?
Yes.
Not
What is the rate today?
it's a range of rates, and it's based on your credit score,
Mm-hmm.
and there's points associated with those rates. So, and then the depending on the loan program, there's limitations on how many points the buyer is allowed to pay for a certain rate. So let's say you have a buyer and he says, well, I'm fine paying just tons and tons of money to get the lowest rate. He can't do that. He can only pay a certain extent of that.
Mm-hmm.
So, he can buy it down as much as he wants to. And this is part of that conversation we have with buyers, letting them decide what makes sense for their budget. Hey,
In the scenario part.
Exactly right.
Okay.
Hey, are you willing to spend X amount for a lower rate? Or would you rather not bring as much to closing costs and you just maybe have a higher rate? So let's say you have a buyer who wants a lower rate and he's tapped out as much as he can legally do. Seller concessions, if we get some seller concessions, the seller can take him the rest of the way if he wanted to go farther in perspective of reality.
So in actuality, the closing costs or the concessions that we get from a seller can be used in multiple ways. It could be used to help with their closing costs, could be helped to buy down their rate, and ultimately doing either one of those, it's helping the buyer bring less money to the table.
The buyer can do whatever he wants with those seller concessions. It is up to his, whatever he wants to do, he can use it for.
Okay.
So that leads me to another thing. This is something Supreme Lending offers. We have something called a temporary interest rate buy down. And this is something the seller would have to pay for. And I do want to say you're not telling the seller, hey, will you give us seller concessions for that? You just ask for the seller concessions. Yeah. So let's say the buyer wanted to do a 2-1 buy down. So the seller would have to pay for it. Mm-hmm. And then let's say their rate is 6 7/8. The first year of their mortgage, because they got a 2-1 buy down, mm-hmm. it would be 4 7/8. Mm-hmm. Then the next year it would be 5 7/8. Mm-hmm. And then the final year it would be 6 7/8, which is their original agreed upon. And then the goal is to refinance them in that time frame.
In those 2 years.
Exactly. So that they never actually have to pay the 6 7/8.
Okay.
But they would still have to be eligible to pay that because that's what they're agreeing to.
Okay. So that's what the loan is actually based on, is the 6 7/8, and then we buy it down.
Exactly.
Perfect. That makes sense to me today. Ask me tomorrow. I don't know.
If you have questions, call your lender.
That's what I do.
That's what you do. That specific one can get confusing sometimes. And a lot of times the easiest way for me to explain it to people is to actually physically maybe get on a Zoom or in person and show them the math and see how their payment's decreasing and how that works. That's the easiest way to really understand it.
Oh, okay. I like the math.
Yes.
When you put it in where my payment is, I think people understand it
better. Absolutely. Because, people don't necessarily see how that drop of an interest rate affects their payment. But when you show them how much it's affecting their payment, they're like, oh, yeah, I want that.
Yeah, I want that. Mm-hmm. Yes. Yes, I have my questions. I'm reading them. What makes up my qualification amount? So what I mean by that question is I want to buy a house and I don't know if my credit's good enough because, what is it? Credit Karma? Yes. Tells me I'm ready and I have a great job. So I go to get a loan and you tell me I'm only qualified for $250. Why is that? And
where does that come from?
Yeah.
So this is the way I like to explain it to people because I think it makes the most sense. So after 2008, without going into detail on 2008, everything in the mortgage business became based on risk. So, there's two really big factors. It's your debt versus your income. And that dictates, and a lot of people, when you go get pre-approved, you think you're getting a pre-approved to a certain sales price. What you're actually getting pre-approved is to a certain payment. So let's say there was a drastic change. Let's say you got approved for $2,000 and that can only buy you X house. But then the rates just dipped and you found a property with really low taxes. Your sales price could go up or vice versa, it could go down. Okay. So really what you're qualifying for is actually the payment, not necessarily the sales price.
Okay.
So how much you make versus how much you're spending, that dictates how much the payment will be. And then the market and factors dictate what that sales price looks like. And then the other half of that is your credit. And your credit dictates, the terms of your loan, whether you qualify or not, and then also, how good those terms are. If you have a lower credit score, if you are credit challenged, maybe your rate might be a little bit more expensive and you might have to go with a higher rate. And we at Supreme have programs in place to alleviate that and help fix credit scores for free.
Oh, okay. Yes, it's called Credit Essentials, right?
Yes. Yeah. So we have a amazing woman that works here. Her name is Lisa Myers.
She is amazing, guys. I've taken her class.
She's incredible.
Is amazing.
So anytime I get a credit challenged buyer, I will send, she's been in the credit industry for years. She knows what she's doing. And we will send her clients that are credit challenged. She'll look through their file and tell us exactly what we need to get their score where it needs to be. And the turn time can be anywhere from 30 days to 6 months, just depending on how severe. But if the buyer is willing to do the work that she says, you will see score improvement drastically. Okay.
And that's the client doing the work. We're not fixing credit.
We're
just
telling you how to do it.
Yes.
Right? And it's a free service that we offer.
Did you say free?
It's free.
Okay.
We want to get you there. What I tell people is, it's like I said, it's not just my job to get you the money. If you can't, we're going to tell you how to do it. And that's part of it.
It's the education part.
Absolutely.
Yes. I like that. So, appraisal process.
Okay. So the appraisal process, I'm not an appraiser, but I would like to I just talked about 2008. After 2008, there was some rule changes with the appraisers. Something big to note is lenders are required to use an appraisal management company so that nobody is in contact with him for the most part. He's just going out there and doing it.
So you're not handpicking the appraisal.
Yes, you're appraiser. Not. You're the guy that lives next door to you isn't your appraiser, going to look at the house for you. So, without going into too much detail on that from the lender side, that is important to know. I had someone who wanted to refinance their home. And with refinance, the appraisal is very, very important because it dictates how much you can get. He wanted to use his own appraiser, and I had to explain to him why now you can't use your own appraiser. You have to go through an appraisal management company.
And I know because when I purchased my home, and that's why I think that what I'm going to ask you is very important. Even with your 8-day close, if I'm a VA, I cannot use that with the appraisal, correct?
Say that again.
I cannot use, as a VA client, I cannot use an 8-day close if I have to have an appraisal, correct?
You're saying because you'd have to have a VA appraiser?
Yes.
Yeah, I mean, it would be harder. It would be dependent on how quick the appraiser can get out there, and we might want to think about that when we're putting in offers.
Because the VA appraisal system is completely
separate. VA's number one job is to protect veterans. I'm a veteran myself, and I've been through that process. It can be, they just want to make sure all they care about is that buyer is buying a good home for them. And it can make the process a little bit longer sometimes. VA is amazing for veterans. There is nothing better. Well, maybe I shouldn't say that, but I'm a veteran, so
I like the VA loan. Myself.
VA loan is incredible. Thank you for everybody's service who can get approved for that. So
thank you all for your service.
Yes.
Okay, so anyway, I know we digressed and went a little deep on that one. But,
yeah.
So tell me about the 8-day close since I just brought it up again.
All right. So 8-day close for buyers, who might not know this, the fastest you can legally close with a loan is 8 days. The only way to close faster is if you're all cash. So the 8-day is the closest you can get to a cash offer, which, can be very competitive and can help you win a deal. Mm-hmm. The way we do this, and the reason it's not the norm, we actually do all of our underwriting up front rather than on the back end. So, we've seen it before. You'll send me a client. I will, look at everything, give them a pre-approval. They go out shopping for a house. While they're shopping for a house, what am I doing?
Asking for more documents.
I'm asking for their documents. Exactly. Yes. And, we do that, send it to our underwriters. They're all local, in-house. I call, if I run into something, they answer the phone right when I call them. And we're working on that file to get them a commitment letter, which is a little bit stronger because it's saying this guy's been, vetted. Looked at, vetted. Yeah. Right. Exactly. So I tell people, because sometimes people get stressed out about getting the documents. Like, oh, do I have to get it to you right away? No, but just the sooner the better, because we can
Time
underwrite
out. Yes, they do. If you want to buy a home,
send the documents.
send the documents.
Send the documents. Like I said, we never want to be a cause for stress, because it can be a stressful process. But the sooner you get the documents, the better, because we can underwrite you and we could do something like an 8-day close.
And as a real estate agent, one of the things I like my people to have everything up front, because it really does minimize the stress on the back end. Because once you go under contract, it's already rush, because you only have 30 days. So the more we do on the front end, the better it's going to make a smooth transaction. And knowing that exact figure, knowing that how much you have to have in closing costs, how much you have in down payment, and what you're going to have to bring to closing, and how much house you can buy before you fall in love with that other house. It's important.
Very important. Actually, can I ask you about that? Because we run into that all the time. I have buyers who, I don't have buyers. I have people who will not call me until they find the house they love. Why is that not a good thing to do?
Well, anybody who knows me, I have, once I'm sitting down with my clients, I always use the same scenario. You can't unsee it. So if you go out and you're shopping for a $500,000 house, but you only qualify once you submit the paper at a $400,000 house, it's hard to unsee that $500,000, and it makes it harder to find the home that you want. That's why I sit down with my clients before and have them get that number, because you can't unsee it. And I know people think that's crazy.
No, it's a very, very good point.
I mean, it's whether you want granite, whether you want a walk-in shower, everybody always wants, the caviar.
Right.
On a beer budget.
Yeah.
So you can't unsee it. So you should always have that number before you go shopping.
Also,
and it doesn't depend. When I say that number, yes, I understand you might make $200,000 or $100,000 a year, but that debt really does make a difference.
You're absolutely right. I run into people all the time that they make plenty, but they spend plenty too. And it maybe I shouldn't say it like that. We talk about, sometimes people co-sign too. I will not tell you not to co-sign if you're trying to help someone. Just co-sign. Know, look, my coworker would have said the same exact thing. So just know that if you co-sign for someone, whether it's a car or a house, if it's recent, if your income can hold it, your income can hold it. Yeah. You can carry both. That's fine. But if your income is not going to be able to afford both mortgages or both car payments or whatever, we have to wait 12 months to be able to prove that you are not paying for that car, that they are paying for that car. That means they've not missed any payments, and that the money has come out of that account into that. Like if you co-sign for someone, just be aware of that.
Mm-hmm. And I know everybody wants to help their loved ones.
Of course. That's why I will never tell people don't do it, because you're trying to help. I would love to help too. She's shaking her head. I'm never going to tell someone not to help someone, but just know that if you're trying to buy a house, you should talk to a lender before you do anything.
Yes.
Because that could be a limiting factor. Yes. We ran into it with a gentleman. He had co-signed for somebody, and it was what stopped him.
Yeah. Mm-hmm. And they don't realize that until it makes it harder for you to actually get what you want, because you've co-signed for somebody else. Me and my kids, I don't know. I love y'all. I might help you pay a payment, but I don't know if I would co-sign.
Yeah. Then that's completely fair. That's people will make the decisions they want to make
based on their lives.
Yes. And some people can hold it. If you can hold 2 mortgages, you can hold 2 mortgages. So just talk to your lender.
Just talk to your lender.
Right, ask me again.
So how long is my qualification good for once I get it?
Yeah. So pre-approvals will have a number on there, but the biggest thing to think about is how long the credit report is good for. Credit report should be good for about 120 days. Now, I've heard this phrase used before. it's good until they do something dumb. And when we're talking about something dumb, it's like furnishing the
Furnishing
home before
the
you buy
house
it,
before you get the keys.
buying a car, right? So if your pre-approval expires and they have not found a home yet, no problem. Call me back. I will, we'll just talk, make sure nothing crazy is happening. If the credit report is expired, I will, we'll look at it again. We do soft pulls.
Okay.
Which does not hurt your credit. We'll just look at it again, make sure nothing crazy has changed,
Mm-hmm.
and then just reissue it. It's a 5-minute phone call.
Okay. So one of the, I did have a situation, it was not with Supreme, that we had the approval, we found the house, but the approval expired in the middle of buying the house. And you guys have to repull when that approval is expired, correct?
Yeah. So, I can't speak for other lenders. What I typically like to do when we're going under contract is, okay, what is it? What is the sales price? Okay, sales price is this. Got it. And then, we do, like I said, we do the soft pulls. If you're about to go under contract, I am required to do the hard pull to completely finalize the file. So I'll tell the client, hey, this is what I'm going to do, and I'll pull it, and then I'll issue another pre-approval letter so that doesn't happen.
So that doesn't
So
happen.
we cross our T's, dot our I's, make sure that it's good before we go under contract, especially when we're down to the wire like that.
Okay.
A good lender should always okay, this is it. Let's check it out.
Yes.
Make sure nothing crazy's happened.
Because that was not a pretty situation.
Yeah, she didn't even tell me that story. That caught me off guard.
Oh, sorry.
No. No, in a good way. In a good way.
Yeah, she didn't buy a house. How about that? So now that I think we've hit all of the questions about down payment, loans, credit, earnest money, closing costs. Is there anything that you want to tell the viewers?
Lender, if you're thinking about buying a house, call your lender. If you're a realtor, communicate with your lender.
Yes, all day, every day. So thank you guys for joining. If you have any questions, please put them below, push subscribe, or contact Chase or I. Our information's below.